Good morning. Welcome to Market Monday and happy Hanukkah to those who celebrate. As other folks are gearing up for Christmas this week, the markets have decided not to slow down quite yet. Let's get into it. Last week we saw November's CPI inflation report come in a bit cooler than expected. Most investors welcome this news as the Fed has repeatedly stated that they are looking for several months of sustained lower inflation before easing up their efforts to tame the inflation dragon. Here is a look at the headline CPI report, which showed a 7.1% annual inflation and just 0.1% month-over-month inflation.
Here are several components of CPI inflation that combine to produce the headline 7.1% figure Chad just mentioned, this white line at the top here. We want to look for which parts are getting smaller than they were. That represents slowing inflation or outright deflation. Here in yellow, that's energy, clearly getting smaller. Goods without food and energy in blue have been getting smaller since spring of this year. Food in orange hasn't really started getting smaller yet. And services without food and energy in this magenta color. Wow, steady trend higher and looks to have plateaued, but no clear signs of rolling over yet. Chad, can you walk us through what that's about?
What are services? There are three main categories of services: shelter, medical care services, and transportation services. Shelter is tricky because it operates on a lag. Often leases last for 1 year or more, so even if rents are coming down, which they are, it won't necessarily show up in the CPI report right away. That's why last week we were talking about lower rents and shelter CPI being a mid to late 23 story, or even a 2024 story. And this is important because shelter makes up about a third of the entire CPI report. Medical care, physician services and hospitals, and transportation, car maintenance and repair, auto insurance and airfares. Together, these categories make up about 13% of CPI, and we're not expecting these prices to come down meaningfully. This is a quick look at month-over-month CPI, and you see the green bars here is shelter, stubbornly, persistently higher. So we'll be watching these green bars and see how it affects this magenta section to see if shelter contributes to slower inflation over the next year.
And to wrap on inflation, earlier we mentioned month over month was 0.1%. Here's recent inflation, this solid blue line. These dashed lines are where inflation would be given various month over month inflation figures. So with November's 0.1% month over month, the green line here, if it stayed at that rate into the future, we would be at that elusive 2% year over year inflation figure by May of next year. Of course, month over month inflation will not stay constant, but it helps to see various paths back down to 2% inflation.
All right, also last week, the Fed raised interest rates again in its historically fast hiking cycle. But how does it stack up to other hiking cycles? Here, we're looking at various hiking cycles since the early 70s, the number of days from the first hike to the first cut. And on the left is the Fed's target rate. Couple outliers here. This guy here, we'll call it seafoam, was the early 80s. Starting at 10% and going all the way to 20%. Here's another early 80s cycle in flamingo. These two cycles were right around when the cartoon from last week was written. Another long and aggressive hiking cycle here in Dijon was the mid to late 70s. And these three at the bottom are from the 21st century. Mid 2000s is the creamsicle color. Look at that pause for almost a third of the entire cycle. That's what some investors think could happen this time around, where it's not an immediate shift from hiking to cutting, but a rapid rise to a long pause. 2015 to 2018 in shamrock green here, low and slow, a timid liftoff from the Fed, testing if the market and economy could bear even the smallest hikes. And of course, in candy apple red is this year's rapid hiking cycle. With higher rates and slower earnings growth, that has folks asking, when will the Fed stop?
It doesn't do us much good to try and speculate or predict what the Fed will do. Let's focus on what we know, which is the next Fed meeting is at the end of January, beginning of February, then skips February and goes to March 22nd. We'll have December, January, and February CPI prints before that meeting. So we do anticipate the Fed having enough ammo to pause further hikes by that time. So that leaves January's meeting as a potential last hiking decision. We'll see. As you know, we'll be keeping up with the inflation data throughout that time. Let's go ahead and wrap today with one of my favorite topics.
Magazine cover indicators. As we talk about from time to time, magazine covers are often a contrarian indicator, meaning the opposite of what we see on the magazine covers is what happens. Look at this, the US dollar. Look at the US dollar index, which is essentially the US dollar against a basket of other currencies like the euro, yen, and so forth. Here's the US dollar index since the global financial crisis. You could sort of fit a diagonal line up and to the right of this one. Here's the same index since 2018, and this is since COVID. This peak right here is Tuesday, September 27th, 2022. And this second peak is Thursday, November 3rd.
Now let's have a look at some magazine covers from that time. Here's Barron's from October 22nd, right there. The powerful greenback. Bloomberg Business Week, October 3rd. That's right here. Can't stop, won't stop. Even the now defunct bankrupt crypto exchange FTX, whose former CEO, Sam Bankman-Fried, was recently arrested, got in on the action by listing a tokenized version of the US dollar to trade. That was also October 3rd. And just for good measure, here's The Economist from December 3rd through 9th, 2016. Here's where that is. Magazine covers aren't a precise timing indicator, and it doesn't always work out like this, but they do have an uncanny ability to sometimes recognize the end of a trend, not the beginning.
Like Matt just said, magazine covers often do have the ability to mark the end of a trend, not the beginning. Case in point, just 4 months ago, Fortune magazine was asking, is Sam Bankman-Fried the next Warren Buffett? Sam Bankman-Fried, or SBF for short, of course being the former billionaire, now incarcerated 30-year-old founder of crypto exchange FTX. Just 4 months later, that tone has shifted from the next Warren Buffett to one of the biggest financial frauds in American history.
Hard to sort through it all. Next week, we look forward to delivering some concluding thoughts on 2022, mainly good riddance, and what's top of mind for 2023. Until then, happy Hanukkah, Merry Christmas. We'll see you next week.